supposed to show you actually the market, but I think my battery is low. I need to go back to the town so I can charge my laptop. But there's nothing really that I need to talk about, which will include which needs a proper demonstration. Ooh, I like this fog. Oh, I am the mysterious guru. I have lived 1,000 years. Now take my wisdom, child. Take my wisdom. I'll pass it on to you. Oh no, that one's done. That was kind of cool. Well, yeah. Let Granny tell you her bedtime story. So, so, continuing on the next topic. Next topic after volatility will be
Stop it. Get some help.
fair value. Because fair value is what appears after uh, volatility. Fair value is what appears after volatility. If the volatility is good, if there was no liquidity that basically recovered the stable price. Mhm. That is what fair value gap is. Let me give you an example. Right. Come on, hurry up. Hurry up. Okay, hopefully I can find a fair value gap for you guys with a big volatility. Guys, I just realized I have no internet in the forest. Yeah, I can't trade in the forest. I have to go back. That's why we're broke, guys. That's why we're broke. The academy is broke because we cannot trade. We do not have the holy aura that provides us with the market. Was it? So anyway, I started blasting. I started joking. Joking. Okay, so that's not working. I'm too far from the signal, so I can't connect to the market. Yeah. So anyway, volatility. So we basically have a good candlestick here. Mm-hmm. Now this in itself is volatility. If there are like small candles before it, this big range, this big movement, or a big constant movement, because volatility is the opposite of consolidation. Volatility basically means an active market, and when a candle is very long, that's a really active market. It's a really big bias. It's a really great volatility. Now, what to do with volatility? Volatility creates fair value gap if the next candle doesn't really completely destroy the bias price, the previous bias price. This, I say liquidity went all the way here. This previous record of price having been a first time in a while of like constantly going up is disrespected. So now with this liquidity, we basically already disrespected this price range that was stable. Technically, there was a great bias, but that also means that price can just continue in this area. Yeah, what I'm trying to talk about though is fair value gap. Fair value gap. Previous candle, moving here. Fair value gap being around this area. where there is no interruption, where price doesn't go in at all previously or after the volatility. That's where fair value gap is. It's fair value. Yeah, that's where the fair value is, because it's a fair value. It's a price range where price was the most stable, where price doesn't like float in and out, where there isn't a constant amount of entering and exiting. It's just a stable price range where people just keep buying, or either keep selling. The stable price range. Yeah. So fair value gap. Fair value gap basically means an indicator of price either going back in the stable price range or price going up further to create another stable price range, to create another volatility. So basically what I'm trying to say here is that fair value, by seeing the fair value, you will know the market situation in way better details than if you were to just analyze the trend or analyze the volatility or liquidity. Because with fair value, you basically know exactly where the market is headed. Like, not as exactly, but there's a better way in knowing. There's a higher chance of getting it accurate because there's more information. With fair value, you gain way more information. You basically know if the market is going to continue up and create another fair value, a big push up, which means a lot of profit, or if the market is going to go back down and further back down, or in just this price range, which is also profit if you sell short and take the fair value profit. That is what fair value is useful for. Really, really great information gatherer technique. Fair value. By knowing fair value, you know when the next volatility will arrive. You know if there will be liquidity. Well, not exactly liquidity. Like, you won't know that exactly precise. Liquidity is usually always random, but not at random because you can just trace back to the old record. But we're not talking about that right now. We're talking about it later. Joe, you just need to know that fair value gap, the fair value gap, the fair value range within a volatility. The price remains stable and untouched within a certain time frame, within the previous time frame and within the next time frame. So what now? The fire's still on. I'll just go to work. Work. La, la, la.